When you look at stocks, past performance does not indicate future performance, but there is something that you always see in the stock market, and that is cycles and repeating patterns. When you look at a chart, you can look at these past repeating patterns and start to formulate an opinion. So Jim has his stock book chart. Nice, good old-fashioned paper, written on paper charts. So Jim, you decided to go back to the drawing board, look at these charts, and you came up with really 3 categories of stock charts. And the first was a best in show. So let's talk about that category.
And this comes from the fact that I've been getting these charts hand-delivered Saturday morning. These are the daily action charts, S&P, and they have a very hard look at, you look at the 10-week moving average, and I've always found that to be valuable. They also look at the 30-week moving average. It's a little longer term. I like that. This came about from when I used to work with Cramer at my hedge fund. She would generate a lot of charts, and I'd try to figure out which ones might be most interesting on a fundamental basis. So she would look at the best charts, and I would then try to find some theses that must justify why they're best, why they're hold up. This morning I said the cyclicals, this is a real money series that I'm doing. The cyclicals seem very ripe for a trade. They've been down. They're working, in part because of Cummins' upgrade this morning, Goldman. I also said, though, that the regional banks could be good. Watch the regional banks. They're all down.
That's a surprise.
They're all down. So you could say, well, Jim, you're wrong. Now, understand what I'm saying is these are charts which you can buy. These stocks can be bought. Tech is working. That's another one. I said Cisco, Oracle, IBM, Cypress. They're all doing. Cypress semi-interesting because they may be in the Chrome, the new PC. But I would tell people, please, this is a way to get started. I think, spoke with Stephanie Link before I came in here, co-director of ActionAlertsPlus.com, my travel trust. We think the regionals represent great value, and we want to buy them right here.
All right, so those are the best in show charts. Now let's take a look at the second best looking. Now these were ones that you thought, you know, were the next category.
Well, I mean, look, these could alternately be argued that they're on the precipice or they could bounce. And the ones I'm deeply focused on here are Bank of America, okay? Because I like the regionals like Key, Fifth Third, I like Huntington. But Bank of America may be the crucial stock here. And you might have to wait till 10 o'clock tomorrow when the Federal Reserve speaks on the Hill. But if this stock holds, I think that you're going to see a bounce in many of the financials. It's really important that it holds. Retail, we've got a bunch of them that are really on the line. I look at Bed Bath, Ross Stores, and Urban. These could be tremendous stocks if they hold here. And then finally, Toll Brothers and Pulte. These are leaders from last year. They are on the precipice, but if they hold, they could be red hot.
That's really interesting because those home builders have moved like crazy over the last year. So
they need to hold. They need to hold to really make this tape great.
Now we have stocks that are ripe for a correction. So these are these may have run too far. What are those?
Now the consumer product stocks, which people are very much in love with now, and here I'm speaking about Clorox, J&J, General Mills, ConAgra, Tyson for chicken, Colgate. These to me are dicey. Campbell's. Now a lot of them are dicey because they were bid up on the idea that if Buffett liked Heinz, all of these will get bids. That's unlikely. Or that their valuations are cheap because Buffett found value. I did Pepsi as a piece last week saying it's better than Coke. I would sell Coke here. I would sell a lot of these stocks. Now, here's the issue. When you have overextended stocks, they can stay overextended for a long time. However, if you ask me what I think would be the better place to be going into where the Fed speaks, I would rather be out of the overextended consumer packaged goods stocks and into the tech and cyclical stocks. That's what I'm betting on.
All right. Well, as Jim mentioned, this is a series he's doing on Real Money. Real Money is on our subscription side, and that's where you can get this information first. If you are joining that, he also has mentioned his Action Alerts Plus.
And there's other stocks to go in this series. I do want to point out,
giving you a taste.
that this is the kind of thing that you get only on Real Money. You just put a sales pitch in here. This piece took me 6 hours, and it's for Real Money subscribers, and they ought to look at it.
All right, so when on the weekend when we're having our coffee and reading the paper, Jim is working
and watching the Oscars.
Charts.
I'm going through the darn charts. You can see the handwritten just as I've always done it.
All right, there you go. Go to TheStreet and check out Real Money subscription side.